Hey guys, welcome back to another episode. In this video we will be going through our Heikin Ashi trading strategy in depth and how we use it in combination with stochastic. Heikin Ashi candlesticks are great. Because they smooth the price action. As a result, much of the noise shown in traditional Japanese candlesticks is eliminated with Heikin Ashi charting. And it helps make the trade entry and exit decision simpler. The very important point before we start. Everything we discuss in this video can be used for currency trading, stock trading and crypto. Because price action stays relatively consistent across different assets. So we're going to go very in depth in this video. Are you confused with not knowing exactly how or when to enter into a trade? With so many different candlestick patterns, traders can get paralyzed by over-analysis on whether a certain candlestick is an entry or not. And have you gotten into a trade where it was going in your favor, but you got out too early? It's frustrating to get out of a position, only to see the trade go further in the direction of the trade you exited. Let's face it, as a trader, we have many things to analyze at any given time. If you take too long to decide whether it's time to enter into a trade because of your complicated entry rules, it might mean a missed opportunity for you. And if you exit your position too early, then it could affect your profitability in the long run. But what if you had a simple way of knowing exactly when to get in and out of your trade without any complicated analysis? Then you want to consider using the Heikin Ashi bars to time your entries and exits. In this video I will share with you a simple Heikin Ashi strategy to simplify your entries and exits, so you will know exactly when it's time to enter or exit a trade. And now, what is the Heikin Ashi technique? The Heikin Ashi technique is a Japanese candlestick-based technical trading tool that uses candlestick charts to represent and visualize market price data. It is used to identify market trend signals and forecast price movements. The Heikin Ashi method uses average price data that helps to filter out market noise. The absence of market noise results in a clear illustration of market trends and direction, which helps determine potential price movements. The trading technique assists traders in identifying when they should hold on to a trade, then pause a trade or identify if a reversal is about to occur. The Heikin Ashi trading technique was developed by Munehisa Homa in the 1700s. The technique shares some characteristics with the traditional candlestick charts used in trading. In Japan, the word Heikin means average for balance, and the word Ashi means bar per foot. Hence, Heikin Ashi means average bar, resonating with the trading technique, which uses the average price of the security. The difference between Heikin Ashi and traditional candlesticks. The main difference between the traditional candlestick chart and the Heikin Ashi chart is that the latter uses a modified formula based on 2-period moving averages instead of open, high, low, and close prices. Hence, the technique generates a smoother chart, making it easier to spot trends and reversals. The Heikin Ashi charts also obscure gaps and some price data. The left chart is using traditional candlestick bars, and the right chart it's using Heikin Ashi bars. You can see that with the Heikin Ashi bars it's much more smoother. This is why some traders prefer to use the Heikin Ashi candles, since it reduces the noise on the chart and allows them to analyze trends more clearly. What makes Heikin Ashi different from a traditional Japanese candlestick chart is how the price is displayed in terms of the open and the close. If you look closely at the Heikin Ashi chart, you'll notice that each of the Heikin Ashi candlesticks start from the middle of the candlestick before, and not from the level where the previous candlestick had closed. Heikin Ashi candlesticks act this way due to the way they are calculated. You have many different types of price action patterns, but with the Heikin Ashi bars I have categorized them to just 3 main types of price action patterns. First, bullish bars. With the bullish Heikin Ashi bars, you will notice that there's only a wick at the top of the bar, but there's no wick at the bottom. As long as this is an up bar with no wick at the bottom, we consider this a bullish signal. Second, bearish Heikin Ashi bars. The bearish Heikin Ashi bars are simply the opposite of bullish Heikin Ashi bars. They have a wick at the bottom but not wick at the top. As long as this is a down bar with no wick at the top, we will consider this a bearish signal. Third, indecision Heikin Ashi bars. So regardless of whether the bar color is bullish or bearish, As long as there are wicks on both sides, we will consider this an indecision Heikin Ashi bar. Why use Heikin Ashi bars now that you know what are Heikin Ashi bars? And you know the 3 different types of Heikin Ashi price action patterns. The question you might be asking right now is, why use the Heikin Ashi bars for our trading? And the answer is because it helps make the trade entry and exit decision simpler. And now, how to enter into a trade using Heikin Ashi bars. While it might be tempting to go long whenever you see a bullish Heikin Ashi bar, or go short whenever you see a bearish Heikin Ashi bar, please resist your urge to do so. I know there are people out there teaching to do this, but I know you're smarter than that. So don't do it to have an edge trading the markets. You need to have certain criteria to be met before entering into a trade. Buying rules or long position criteria. Number 1. The higher time frame must be in an uptrend. What this means is that the high time frame has to be making higher highs and higher lows. If you're trading the 1-hour chart, then the higher time frame would be the 4-hour chart. And if you're trading the hour chart, then the higher time frame would be the daily chart. I use the 10 EMA and 30 EMA to determine the momentum of the trend. So criteria number 2, the 10 exponential moving average is above the 30 exponential moving average. Criteria number 3. The time frame you're trading on must have both criteria 1 and 2 as well. Once there are these 3 criteria in place, I will look to go long. When the price bounces off either of the exponential moving averages, and the first bullish Heikin Ashi is formed at a higher low like this, then place stop loss below the low of the current swing low. Criteria for a short trade. Now that we know the criteria for a long trade, the criteria to get into a short trade is just simply the opposite. Criteria number 1. The higher time frame must be in a downtrend. This is denoted by price forming lower highs and lower lows. Criteria number 2. The 10 exponential moving average is below the 30 exponential moving average. This is straightforward, and you should have no difficulties identifying this on your chart by now. Criteria number 3. The time frame you're trading on must have both criteria 1 and 2 as well. Once you have all 3 criteria, I will look to go short. When price bounces off either of the exponential moving averages, and the first bearish Heikin Ashi is formed at a lower high. How to exit a trade using Heikin Ashi bars. As for exit, because this is a trend trading play, we want to exit only once the price has formed an opposite Heikin bar. So for long trades, we only want to exit when a bearish Heikin Ashi bar is formed. And for short trades, we only want to exit when a bullish Heikin Ashi bar is formed. As you can tell, it becomes so much simpler to determine when to exit. Now sometimes if you are in a long trade, you will get faked out of your position, because a bearish Heikin Ashi bar only to see the next bar become a bullish Heikin Ashi bar. Or vice versa if you're in a short trade, but that's fine. There's no way you're going to catch every single bit of every trend there is. Ultimately, if you are profitable from your trades as a whole over a series of trades, then that's all that matters. Trading examples. Alright, enough theory. Here's a trade example to show you exactly how to enter and exit into a short trade. In this chart, you can see that the market formed a lower high and bounced off the 30 exponential moving average. Once you see that happen, the next step is to wait for a bearish Heikin Ashi bar to form. When it's formed, go short at the close of the bar. From there, the market dropped pretty quickly and indecision Heikin Ashi bars started to form. This is not a good reason to get out, because it could just be consolidating before the price goes down again. However, in this case, the price did not go down further. Instead, a bullish Heikin Ashi bar was formed, and that means to get out of the trade at the close of the bar. Here's a trade example of how to get into a long trade. In this chart, you can see on the left-hand side that the price has spiked up pretty quickly and then started consolidating. Consolidation in an uptrend is a good sign, because this could mean that price can go up further. And the market did bounce off the 10 exponential moving average and formed the first bullish Heikin Ashi bar. Go long at the close of the bar. Price did go up further before an indecision Heikin Ashi bar is formed. Immediately after the first indecision Heikin Ashi bar is formed, the next bar after that is a bearish Heikin Ashi bar. That's the signal to exit out of the trade, and fortunately for us, price did eventually go much lower after we exited the trade. However, not all trades are going to be like this. As I've said this a number of times already, it doesn't matter if you do not catch the whole movement of the trend. It's impossible to do so. What you can only do is take whatever you can based on your trading system, and in the long run that will lead you to profitability. Here are other examples of Heikin Ashi. Now you must be very interested in the method of using Heikin Ashi candles. By using Heikin Ashi candle, 10 and 30 moving average exponential, you can make a trade with high rate profit. However, in some trades you can exit too early because of reversal Heikin Ashi candle appear. Now let's optimize our profit by adding more one indicator. First, open TradingView and one chart at 1 hour time frame. By default the chart is displayed with tradition candlestick. To change the chart to Heikin Ashi style, just click on Candle tool. Select Heikin Ashi type and you get it now. Now let's add 10 and 30 moving average exponential. Click on indicator and type in search box with EMA. Click 2 times. Then have some change in setting option. For the first EMA, in the input option change the length to 10. In the style select yellow color and thickness as you like. For the second EMA, in the input option change the length to 30. In the style select red color and thickness as you like. Look great. Finally, let's add one more indicator that help our strategy to become perfect. Click on indicators. Type stochastic on search box. Click to select. Okay, all setting is done. Now let's investigate how we can use this. For stochastic indicator you need to clearly understand 4 zones. Buy, overbought, sell and oversold. And here is average line. Let's see how this indicator work. As you can see on the indicator, have some condition to change the uptrend to downtrend. First, the stochastic indicator reach or almost reach the overbought zone. Second, the blue and red color cross each other. Therefore sometime they cross each other but not in overbought zone. That means the uptrend is still continuing. And there are only small consolidation to confirm upward movement. The same for changing from downtrend to uptrend. First, the stochastic indicator reach or almost reach the oversold zone. Second, the blue and red color cross each other. If both criteria are met, the trend reversal may occur. Now we apply for our trade. For your sell trade. As you can see we have a sell trade at this bearish Heikin Ashi candle. After few down candle the indecision and bullish appear. Normally when the indecision and reversal Heikin Ashi bar appear we need to exit the trade. And we need to exit the trade here. But now we can see at the stochastic indicator. Our trade is still in sell zone, let's waiting for confirmation. After few indecision bar the bearish bar appear again. And you get more profit. Close the trade if your target is done. If not now you can see. Indecision bar and bullish bar appear again. At this time you can see the trade is reached buy zone. So you need to close the trade immediately. For the buy order, observe Heikin Ashi candles and stochastic indicators. You've just make a long trade, few hour later indecision and bearish bar appear. And you are going to close the trade. At the stochastic indicator our trade is at buy zone and you can try a little bit danger. After that cross indicator appear with some indecision bar. Finally bullish bar appear again and hit higher profit. You get more profit without make more trade. That's great. The combination Heikin Ashi and stochastic is a great strategy. But trading requires us to have knowledge, experience and good risk management ability. Good luck and hope you can will every trades. Trader, if you find this video useful, please like, subscribe and share with others. Thank you so much.